Hello, YouTube. How are you? My name is Mike. This channel right here is Health and Wealth. Thank you so much for joining me today. Today is Group A's announcement of their distributions. Now, we are talking YieldMax. YieldMax has four groups that they pay out, so A, B, C, and D. They also have a number of weekly ETFs. We'll talk about all of those and how much they're going to pay you. So today is Wednesday, March 19th. Tomorrow is Thursday, March 20th. That's the X distribution day, which means that you have to have your money in these funds today to qualify for this distribution. What's really nice is that this will happen again 4 weeks from now. So if you want your money to be in these funds to make distributions, then if you put it in tomorrow, you'll receive an automatic discount on these ETFs. But it really depends how the market's doing. The market could go down, could go up, depending on however which way the wind blows. Now, today, Jerome Powell had a speech. He talked about the state of inflation, and it was staying the same, flat, easing some minds and hearts. There was extreme fear in the market as per the chart, but yeah, it seems to have gone up here. The market's going up. So tomorrow you will see the discount of the distribution I'm about to tell you, potentially plus more, depending if the market goes up or down. If it goes up, then obviously it won't be as heavy as these distribution announcements. But if the market goes down, then it'll be worse, right? So a lot of people like to buy on X distribution date. This is not advice. This is just me telling you what people like to do. But there's a SPY. I'll zoom into it just a little bit here, but up 1% today, and then up a little bit in the post market there as well. So here is the announcement that was given to us by YieldMax this morning at 6:55 a.m. It came in via email, and this is right on their website in the news section. So first off, we're going to talk about GPTY. This is a weekly pair. It's paying out 26 cents this week, which is, I think, pretty good. Let's take a look at GPTY. I want to make sure I've got it. I do. So you can see this is going to be, its seventh, eighth payment. So right along the lines of the other ones there. GPTY is an AI play. It started off at $50 a share. It's down 17% in share price since it came out, which was in January 23rd. So it's been out for almost 2 months now, down 17%. But you can see over the last couple of weeks here, it's just kind of hovering around the same price, which is good. We like that. As long as it can hover, stay the same price, and pay out a distribution, then that's good news. Next one is going to be the next weekly pair, which is LFGY. And LFGY, let me just take a look at it, paying out 47 cents. And 47 cents is right in line with what is paid over the last couple of weeks, which is good too. LFGY is going to be your crypto play with a lot of different crypto funds inside of it. I think Mara, potentially Riot's in there. Some ones you probably haven't heard of are all within this fund. If you're a crypto person, a crypto bro, go take a look at it. And yeah, you never know. It could be good. But this thing came out same date, January 14th, actually a little earlier, and it's down 24% now in that time. Bitcoin and crypto has had a bit of some volatility, and so that probably contributed a lot to this going down there too. But 24% in just over 2 months, not good, but I mean, you're getting your distributions every single week, that is good. So, grain of salt, half empty, half closed, half full, all of those sayings tied into one there. Next, we have QDTY. This is a weekly pair as well. This is following the Qs, QQQ. So QDTY, let's go take a look at the announcement here, paying out 31 cents. That's pretty decent for a weekly pair. Here's what it's looking like on the old stock market. Now, this has only been out for, a couple weeks, like a month now. So it's down 10%, but let's put that in perspective. The QQQs are also down, approximately 11, 12%. So it's kind of in line with that right now. Now, today, if we take a look at it, the market did go up after the Fed announcement. But I think you got to be happy with the direction it's going. 31 cents, not too bad. QDTY. And so this is going to be its fourth payment and second highest since it's come out, which is cool. Next is RDTY. This is going to be its first week paying out. It is 31 cents. First payment on this fund. And I mean, it's been around for not very long. It's only 4.91 million in net assets. It's been around so short of a time, I had a hard time finding it on the stock market. So here we are, $49.66. Congratulations on its first payment. Next one is SDTY. This is following the S&P 500, 31 cents this week. Yeah, let's take a look at the price of the ETF here. So it's down 7%, but it has paid out a decent distribution since it's come out. Now, because it's the S&P 500, it won't be paying as lucrative as the SDTY, but still it should should be more stable. We'll find out, right? Next up is going to be its second week as paying a weekly. This is going to be Alti, ULTY. You ain't got an alibi, you're Alti. Paying out 9 cents, just a cent less than last week here. For me, it's a no-go, although everybody says the fund's doing amazing since the change in strategy, but I don't care. The price is too low. I just think it's too risky. It hasn't had momentum going in the right direction other than its payments, but you can't convince me, right? If you take a look at the last month, down $1.70. Look at the last 6 months, down 36%. If you look at the last year, down 61% in share price. And so I don't see the end of that rainbow looking good, but you do you, and I'll do me. Yeah, so it's all good, right? But, you got to be happy with your distributions, I suppose. Next up is going to be YMAG. YMAG paying out again, just, steady Eddie here. YMAG paying out 8 cents. So I remember the video last week. I said I was surprised it wasn't the 5 cents last week. So I guess it's this week, the 8 cents. So that's normal. This happens with YMAG. It goes in a rotation of 1 out of 4 weeks. It's lower. Okay, so there we go. Share price down 20% over the last 6 months. But I mean, over the last week, it's not even 0.5% down. And then today it went up, almost 2%, which is great. So next up, YMax paying out 15 cents. Here's YMax. There's all of its distribution. So it's higher than last week, which is nice, 15 cents. And then, I mean, I'm not a big fan of that share price. I mean, it has really, really decreased here in the last year, down 32%. So yeah, for me, whenever I see share price dropping so dramatically over a longer period of time, it's just not, in my opinion, sustainable long term. I know you're going to get distributions the entire time. I know what they can do to make it sustainable. They can do reverse splits, but then I mean that cuts your shares in half, and it's not good. Whenever you see the staircase going down for this long, for me, it's a no. Right? It's not. I'm not interested in that. Now, if the market can kind of correct itself over the next few months, can they make this go back upwards? And if so, yeah, maybe then it's something I personally would buy. But right now, it's a no. Next, we're going to get into our monthly pairs. I'll start that over again. This is recording number 3 on this portion. So let's see if we can get through it, everybody. By the way, if you're here, thanks for being here, and hit the like button, subscribe button. I really appreciate you being here. If you want to become part of the membership, I've got 5 members. I'm looking to take it to at least 10 so I can start doing some live feeds for them. But yeah, let's talk about the monthly pairs here, or the 4 weekly pairs. Crash the first one. This is an inverse fund for Tesla, which means if Tesla does very well, this will not do very well. If Tesla doesn't do very well, you guessed it, this will do very well. So paid out 64 cents, which is one of its highest payments ever, all the way back to October of last year. Crash is sitting at $8.26 in share price, and it's down 58% share price since day one. But if we go backwards, I mean, you are getting paid every single 4 weeks, which is nice. Next up, we have Feet. This is a new fund. It started in December 17th. But paying out 69 cents, this is his third distribution. YieldMax kind of does a thing where they pay really heavy the first couple of months, and then they slow it down a little bit. I'm not too sure really why they do that. I've got ideas though, but yeah, take a look at the $36 in share price, down $13 that were 27% since it's come out. So not positive, that's for sure. 5e, Fivy, 70 cents. You got to be happy with 70 cents. Again, same deal, lower than usual. And again, share price down 26%. Now, the market definitely has something to do with this. And we've had kind of a volatile market since, mid-January till now. I don't know what happened, but something happened to make the market go down. But next we have GUI. GUI paying 32 cents. This is pretty standard for GUI. They pay around that 32-cent mark, usually every month. Share price down 37%. Since inception, it's at $12.83. But you got to keep reminding yourself you're in it for the income, right? You're not in it for the share price, or are you? Because if you are, there might be better options for you out there. And I haven't looked at GOOP in 2 months, so I don't know if that's a better option or not. So, but it is an option, right? So take a look at it. Maybe it is, maybe it isn't. I have no idea. Just options. That's what I'm here for, letting you know what options are out there. All right, next we have OARC. This is an ARC K play, 32 cents right there. Yeah, OARC's been out forever, since day one. 32 cents. It usually pays around that 32-cent mark, but $8.36 in share price right now. It just steadily goes downhill. When I look at stocks and ETFs, if they're continually going downhill, I don't like that. But if you're still getting a payment, then that softens that blow a little bit. But if I don't see any like momentum to make it go back up, then I'm not going to be invested. I'll give you an example. I was invested in QQQY, and it just was a staircase down forever. Then they did a reverse split, and it was the same thing. Same thing's happening at TSLY over here. I don't know if you guys noticed that or not, but yeah, I'll show you in a second here. Let's talk about Snowy, paying out 81 cents. That's a pretty good distribution. Right in line, right in the middle of the last two there. Snowy share price $16.83. Not too shabby. I mean, it's down 16% in the last year. Not as bad as the other ones, and it still pays out a good distribution. I also looked up the underlying stock here. The underlying stock throughout the year is down 1%. So, okay, let's go back to Snowy in that 1 year. Down 16%, but you got your distribution. So that is not a terrible play, in my opinion. SNOY. Got a few left here. We got TSMY, but before we get there, we got TSLY paying out 46 cents. And seeing as it's paying out 46 cents, let's go take a look at it on YieldMax's website. So there's the 46, and then there's they updated their website. That's nice. There's the previous months, right? So it's a little bit lower than usual. Now Tesla didn't have a great month, that's for sure. TSLY share price up today, but we know tomorrow it should drop the price of the distribution announcement here. But over the last year, down 47%. I was taking a look at it earlier on my live. If you didn't see the live, join it. Check it out after this video. I'll link it at the end of this video if you want to take a look. But over its inception, it's down 59 or 79%. So I was in this. This is the first YieldMax fund I bought. I sold out March 11th, 2024. So just over a year ago. And here's the reason why. Just look at that. It's not good, right? And so is this the strategy that we're going to keep paying out a lot of money and have the share price go down and then do a reverse split again for the second time? Is that the strategy? Because it doesn't appear to be working. I know that you're getting your distribution, but it's almost net zero with TSLY. It's not been a positive fund in my what's the word I want to look for? In what I'm thinking. It's been a long day over here. Oh my goodness. Let's move on. TSMY, 57 cents. TSMY, pretty standard here, 57 cents with these. And share price, $15.75. So down 21% since its inception. Next up, XOMO. XOMO, 29 cents. Say it with me, XOMO or ZOMO. A little higher than last month. Share price $14.80, down $18 or 18% in a year, down 27% in the last since its inception. So yeah, there you go. One to go. Why bit 43 cents. People are talking that all over the internet. They're thinking about Ybit. So it's its lowest distribution ever on Ybit, but I mean it's a Bitcoin play. Bitcoin didn't have a great month, so that kind of makes sense to me why the distribution is quite a bit lower. But down 47% since its inception, which was all the way back not even a year ago. So it's half price in a year. But you did get paid distributions and pretty lucrative distributions that entire time. Now, I'm not doing the math right now, but you can definitely do the math and see if it makes sense that if you made money on this, and there's lots of cool websites that can show you total return. If that's something you want to look into yourself, then I would definitely recommend that before you buy any of these funds. And before you buy any of these funds, I would also take a look at some positive momentum on the company itself. Is the company going down, then these are going to go down in price. Is the company going to go steadily up, then these should follow it. Should. But I mean, if we look at Google, it's not happening. Right? So, yeah, I don't know. I don't know what you guys want to do. For me, I'm invested in 3 funds over at YieldMax, Nvidia, because I think the company is going to positively go up. I'm invested in Misty because I think Bitcoin is going to go up. Bitcoin, Mr. MicroStrategy strategy. And then I'm also invested in Coinbase. And I think crypto is going to continue to go and people are going to start buying more and more crypto out there, which pays the fees to Coinbase, which should help me with my Coney fund, even though it's been a steady staircase down. I don't know what you guys think about this. Yeah, invest smart, do your research, pay attention to what you're putting your money into. Don't put all your money in one basket. If you're not a professional, get financial help from somebody who is a financial analyst. And I think that's a really important thing to do yourself, okay? My name is Mike. This channel is Health and Wealth. If you like this video, you're probably going to like the live from earlier today. We had a really good discussion. I hope you have a good night. Bye for now.